Not Titles podcast is brought to you by Land Trust Title Services, your partners for results. I'll start off.
Yeah.
Well, hello, everyone. This is Steve Kempf with the People Not Titles podcast, and I'm here with my colleague, Matt Lombardi, Senior Marketing Manager for Land Trust and aficionado of all things real estate. Matt.
Yes, thank you, Steve.
Yeah.
Glad to be here once again, and thank you, everybody, for your support and watching Market Trends.
Yes, there's a big a groundswell of attention given to our podcast. So listen, this is the October version of our podcast. I like our new feel. We're in a new setup, Matt. We got kind of a news desk type.
It's a nice little setup. It makes us look a little more official.
Yeah.
So yeah, I'm very happy about this.
Awesome.
I'm representing the brand today.
Love it.
So
yeah, you look good, man.
We're good to go.
All right, Matt. Let's get into it. So we're about now a month and a half out of the kickoff for when the clock started for the new real estate rules and the NAR settlement impact for buyer agency and those kind of things. What do we have for an update, Matt?
So there's I'll say a couple things regarding the NAR settlement. And one is, from what we've heard and seen, things are going along decent in terms of the separation of listing agreements and buyer representation agreements.
Yes.
I think there was some trepidation and worry in the marketplace that there would be this big groundswell of we don't know what to do. And it seems to be working itself out okay.
Yeah.
As far as we see, there's some things happening behind the scenes with title companies and attorneys, maybe some mortgage companies. But I think the industry itself has leveled itself out and is figuring it out, and it's not this huge problem that we thought it might be.
Yeah, Matt, a comment, just anecdotal, but from a lot of people that we're talking about, it seems to me, and we love small brokers, we love big brokers, we close them all, but it seems to me like there are great pains that have been taken by large brokerage companies that have a lot of liability in this. They wind up footing the bill for these big settlements, that they've taken great pains to prepare their agents for explaining their value proposition as a buyer's agent, and for making sure that the revenue that is due a real estate agent for the work that they're providing is still coming in. So far so good on that front. I have heard, just again anecdotal, smaller brokerages, they're a little less in the know. They need a little bit more hand-holding, a little more coaching, but that is not necessarily across the board. There's a lot of awesome small brokerages out there that are also well prepared. So I think the industry might be better off for it that the buyer's agent is now able to have a relationship with a buyer as opposed to them having 5 or 6 different relationships. And as well, I think the buyer's agent is being more intentional about articulating their value proposition and then delivering on that value proposition. So
yes.
I think it seems to me like a positive. So
yes. Moving forward, there was some breaking news that came out. Breaking news that came out yesterday, and this was regarding the NAR settlement. Just to go back a little bit, when NAR settled with the Department of Justice, certain larger brokerages were precluded from being included in their overall big settlement. So some of the larger brokerages across the country had to either negotiate, settle, or go to lawsuit on themselves. They are starting to trickle in where brokerages are settling. So 2 larger brokers, one is John L. Scott, which is a large independent broker based in Washington.
Doing billions of dollars of business.
Yeah, so I think it was any brokerage that did in 2022 over $2 or $3 billion in business transactions. So John L. Scott was one that settled yesterday for one of the lawsuits. Or
was there an amount that they talked about?
They did not.
It's undisclosed.
It's undisclosed what the settlement amount is.
But that'll be interesting because that's going to be kind of a bellwether for other brokerages.
Correct. And then another larger brokerage in the state of Michigan, Realty One, also settled. So both those brokerages settled, became part of the settlement yesterday for this
breaking news. I mean, you can't get any hotter than that, Matt.
It's smoking.
Yeah, it's smoking.
It's smoking.
Yep.
So that's another. Talking about NAR in general, for those of you that follow NAR, Nikia Wright, who was the interim CEO after Bob Goldberg, to clean up a lot of the mess, officially became the full-time CEO, I think about 6 weeks ago. I think probably about a month ago. So she is now the official CEO.
And how do you think that's going to impact the NAR, Matt?
Well, I'm not 100% sure. I don't know her very well. It's interesting because
you were part of the cartel at one point.
I was part of the mothership, as I affectionately call it.
Yeah.
And Nikia was different in that she was not an industry person.
Okay.
Meaning she didn't come up through a local CEO of a local or state association. She came from the outside. I think her previous position was CEO of the Chicago Sun-Times, and she shepherded the merger, for those of you here in Chicago, where the Sun-Times and local public radio merged to become a not-for-profit.
Okay.
Which is unique. So anyway, that was her last position, and then she was hired at NAR. She is full-time now.
Could be a positive thing that she's outside of the industry. Let's wait and see.
Could be a positive thing. One of her first acts of business, even though it doesn't say this, Katie Johnson, who was their chief legal counsel, is no more.
Oh,
she
stepped down.
Correct. In quotes, stepped down. I will share my own opinion. I'm surprised she lasted this long with all the stuff that happened over the last 18 months between the sexual harassment claims, work harassment claims, this lawsuit. But I think that's one of the first orders of business now that Ms. Wright is now the CEO. She is making a change.
Okay.
There is no replacement yet, but that I thought was pretty big news to share with our
and that could be a positive thing from the members that are thinking, hey, we don't feel like we were represented well in this situation that wind up costing us quite a bit. This could be a step in the right direction for them to say, hey, good or bad, let's clean house, let's get new people in. And
yes, it's optics, it looks good, showing like, hey, we're doing something.
Matt, but the big question that I think everyone's thinking is, will they still keep the statue of you out in front of the building, or yay or nay?
So unfortunately, the statue was removed a long time ago, and I think it was put in some hidden storage closet.
Mothballs?
In some secret location.
Yeah, we'll have to erect it out in front of our building.
Yes. The last thing, and this is more breaking news, this just came out this morning. NAR vows to assess legal risk and develop a comprehensive litigation strategy to size up any additional legal exposure.
Wow.
And so Nikia Wright, who is the new CEO, she shared this with her board of directors. How I read into this without knowing much of what this is they are anticipating potential more legal exposure and potential more lawsuits from others.
Wow.
So not a fun time.
Yeah.
But we'll see what happens.
All right. So, Matt, we got Alabama Association of Realtors. Let's talk about this, because this could also be something that spreads.
Yeah, so this is an interesting thing that came up, and this was from last month. And the Alabama Association of Realtors, not a huge association, not a huge membership base, but they reached out to NAR, the mothership, and said, we want to make how we are a federated membership, and I'll talk about that in a little bit, optional. So the way it works out now, and we've talked about this, I believe, on a couple previous podcasts, but it's called a three-way agreement. So when you become a realtor, you are joining your local board of realtors, your state association of realtors, and the National Association of Realtors. 3 separate memberships where you're paying 3 separate dues payments for those.
Yeah, and Matt, knowing the local boards here in Illinois, knowing who's involved with the state, I'm not going to speak on the national, there's a lot of impact that the local boards have, and there's a lot of impact that the state boards have for realtors. It's kind of like the last one to realize or notice the water is a fish, that a lot of realtors are swimming in waters that are friendly and have all kinds of different infrastructure to it because of all the work of the associations locally and state. So we want to acknowledge that, and even with the NAR.
Yes. And so Alabama is saying, hey,
we want to make it optional.
Our members are saying to us, and we want this to be optional, which means if you're a realtor in the state of Alabama, what Alabama wants is, I choose to join 1, 2, or 3 of these levels, keep them separate and distinct, whereas the model across the country, by their bylaws, says, Steve Kemp, you're now a realtor in the state of Illinois. You'll be joining
all of them.
All of them. So your local board, state of Illinois, and national.
And Matt, what do you think of that? To me, just sitting on the outside, it seems like each one has to provide their distinct value.
Yes.
And if they're going to provide value, then I want to join, as opposed to, like I joined. I don't know if we ever talked about the KISS Army. I understood the value.
Yes.
I knew what I was going to get, and I joined.
Yeah.
Everyone didn't have to join, but I wanted to.
So this is an interesting thing of what will become of this. Mm-hmm. My guess is nothing is going to become of it, and they're going to say no.
You have to be a part of it. It's like that's the cartel, the mafiosos.
So you could look at it from both sides, and what I'll say is yes, it comes down to numbers. Mm-hmm. So if someone decides not to join NAR, it lowers their numbers. If someone decides not to join the Alabama Association, because on a political front, higher numbers sounds much better than lower numbers.
And it gives you more influence and power over, lobbying and whatever else
Correct.
You want to do.
Plus, everything comes down to money. Follow the money.
Follow the money.
Everything. And so more members, more dues dollars, more money. And so someone, if this federated three-way structure goes away, is going to lose.
So we're going to keep our eye on this, Matt, but this is all new developments, and nothing, it seems like, is off the table here.
Yes.
All right, let's talk about private firm completes controversial real estate Colorado acquisition. What is this?
So this just transpired and became official last week.
Okay, this is semi-breaking.
This is semi-breaking. So in the Denver area, the local MLS was owned for years by 2 of the local real estate associations. There was a lot of stuff that happened between the scenes over the summer where board of directors were involved, and then they fired their board of directors. There was leaks to the press.
Wow, lots of drama.
Lots of drama. The bottom line is it's not private equity, but a privately owned and created company bought the majority shares of this MLS, which means it will no longer be owned by those local realtor associations. And that's part of the realtor structure as well, is a lot of these MLSs that are owned by realtor boards and associations. In order to be a part of that MLS, you also had to be a realtor. This is going to be very interesting to see what happens. So the public-facing PR work that's done is like nothing's going to change. The MLS structure is not going to change. The MLS payments that you are going to make to be part of it is not going to change for like a year and a half. But the bottom line is this is going to be interesting to see if this is a trend where realtor boards and associations that are on the hook as part of these lawsuits and settlements are going to say, I don't want to be a part of that anymore because of what's happened, and we're going to sell our equity stakes to private firms to do this. So that's an interesting thing to see.
And do you think that access to the MLS could change?
Access to the MLS through these private ownership structures, just to look into a crystal ball, it could definitely change.
So in other words, you may not have to be licensed to have access to the MLS.
Correct. You might not need to be licensed, or it could be perhaps consumers can go in and do this. We're live here, Peter. We're gonna have
we had a break in there. Don't worry about it.
Oh, that's funny.
Okay.
So I'm eager to see what transpires, because you're absolutely right, Steve, in that this may open up levels of MLS membership that we haven't seen before. In terms of you and I perhaps could open it up, could be part of the MLS.
So investors could have that, and so this could change the game for brokerages. And then on the other hand, if there are associations that do stay fast with their MLS ownership and all that, all of a sudden they become more valuable.
Yeah.
Right. And so I like, hey, I think it's time to rethink everything, and I think it's time for us to say what's going to work best. And I love that people are trying new things. I know other people may have different opinions about this.
Yep.
Okay, Matt, let's talk about this article. Mediocre Chicago real estate agents could be pushed out. And I want to say maybe instead of could, maybe it's should.
And are.
And are. Should and are.
We talked about this a little bit before. Steve, I think you brought this article to the table. There's a lot of agents out there, a lot of realtors out there that got into this business for one reason or another, and they're now reevaluating whether they can maintain the cost of being a member, what they need to do in this new world of being upfront and getting buyer brokerage agreements signed. The out-of-pocket costs, I think we did this analysis a few months ago. I think it's $2,500 to $3,000 locally to maintain your realtor dues as well as MLS fees. And if you're not doing deals, does it make sense?
Yeah, and Matt, just talking about $2,500 to $3,000, that's before you do anything to market yourself, before you buy anyone a cup of coffee to have a conversation about, so the real expense of being a professional broker could be as much as $10,000 a year just to say hello. So it's a real business, a real profession, and the mediocre ones are going to look at this and say, this is not fun for me to pay to play.
Right. And currently there's around 1.5 million realtors nationwide. If you ask the 20% of the realtors doing 80% of the business, they will say, because they have said this in the 30 years I've been in this industry, there's too many people who don't know what they're doing. I have to carry the deal. I don't want to deal with these quote-unquote unprofessional people, but I want this deal done. So from an industry perspective, a good thing. The fun thing is, and this is part of the article, is most long-time agents say they're not, with everything that's transpired, they're rolling with it. They've taken the bull by the horns and said, we accept this new way of doing business. We have no problem sitting down with a buyer to say, please sign this buyer brokerage agreement where you agree 100% to work with me and pay me this amount.
In fact, Matt, what I do know is many brokers. One of our podcasts coming up, Wayne Paprocki. I spoke to him. Industry legend. He said, I've been signing a buyer's agency agreement for 40 years.
Yes.
So there are many people out there that are already like, listen, don't waste my time. I'm a good broker. You want to work with me, it's a privilege.
Yes.
I love it.
And so most of the longtime experienced agents, they're not sweating it. They're rolling with it. And in fact, many of them, and I've heard this anecdotally, and I think you have too, their commission rates have actually gone up.
How about it?
Versus down.
Yeah.
Which is, from an industry perspective, we're eager to see what happens. In the very short term, it looks like it's ticked down nationwide slightly. But once again, I think for a lot of these agents, they are going to represent themselves and say, here is my value.
Yep.
Here is my rate. Here is what I'm going to do for you, consumer. I deserve this. And the consumer will say yes or no. And I think a lot of times consumers will say absolutely.
Yeah, Matt, I think there was this narrative for buyer's agents of saying, oh, well, all they do is open the door. And the buyer's agent looks at it and says, okay, wait a second. I think for the first time, maybe not the first time, but I think many of them have sat down and said, actually, there's about 100 things I do. And, you see these lists on social media, all the things I do. It's like, wait a second, man, I work really hard for this. And so they have all the more, all the more intention, courage, belief that the value they're delivering is worth it. So kudos to them.
Let's do this one
Okay,
next.
let's do this one next. We talk about Americans' home affordability crisis has a solution, and it's not lower rates, Matt.
Correct. So this is an interesting article that brings up a couple things. So, and we're going to talk about what's transpired with interest rates and all that. But the solution to what's happening in our industry over the last 2 years is not that rates are too high, even though they have been. It's an inventory problem. And one of the biggest things, and Steve and I were talking about this recently, is for the first time in quite a long time, our political candidates, both Donald Trump and Kamala Harris, are talking about housing.
Right. Affordability.
Home affordability, inventory shortages, and actually talking about it in their stump speeches, in debates.
There was a State of the Union reference by Biden.
That's out.
That was sometime, right. But just this idea that home affordability has been on the radar.
Home affordability, but also inventory, which there's many reasons for lack of inventory, but home affordability is big front and center. So Donald Trump, one of his things that he's talking about, and I don't want to get political here, these are the facts. Donald Trump is saying we're going to reduce regulations to allow, because building is on a local level.
Yes.
There's some national home builders, but even they have to deal with local regulations. His solution is we got to get through the red tape, because there's a lot of local red tape, and I'm not sure from a national perspective how you do that, but that's one of them. All the costs that go into it, energy costs, gas is X dollars a gallon. I need to get this lumber transferred here.
Right.
The wages of people. So it's reducing that, but also building on federal lands, I think is part of his proposal. I don't know, but there seems to be a lot of federally owned lands, and allowing builders to get those and build on it. Kamala Harris, I think part of her proposal, first-time homebuyer assistant program, I forget the dollar amount, $10,000, $20,000, where it's a tax credit for first-time homebuyers, plus adding 3 million new homes into the pipeline. I don't know how you do that, but there is apparently a plan for it. But those are good things to talk about.
Yeah, so it's on the radar. It's in the public consciousness.
Correct. And I think Jerome Powell, Fed chair, has also talked about home affordability in the last meeting they had. Because and home affordability is not just buying a home. Home affordability, in their definition, is also rental rates. And so rental rates have gone up, gone up, gone up. They're starting to level off across the country, as well as home affordability is still high. I think we reached our highest levels last month or the month before. But it's leveling off a little bit. So we'll see what happens. But that is the big thing. And I'm glad that people are talking about it.
So, Matt, the solution is not lower interest rates, but you're saying the solution is inventory.
Inventory will help.
Inventory will help.
So much. Because
with more inventory, the price goes down.
As my father has said over the years, everybody needs somewhere to live.
Yes.
And, you need somewhere to live. And I feel bad for first-time home buyers, the younger people out there that are trying to find their first rental, their first property ownership. It's tough because if you don't have a large down payment and you're paying an exorbitantly high price for it, I say highest price almost in history, with higher interest rates, it doesn't make sense, and it's tough. So anyway.
All right. So, Matt, we all need a place to live,
yes,
and we
do.
all need someone to lean on.
We do.
And, you can lean on me. That's what Mick Jagger says. So, listen, U.S. inflation rates and mortgage rates. Let's talk about that. We can segue right into it.
So this is not breaking news. This is old breaking news. On September 18th, the Fed met, and everybody was anticipating a rate cut. But nobody knew how big the rate cut was. And the rate cut, for many of us out there, was bigger than anticipated. So
they expected a quarter point, right?
Quarter point was the industry favorite. Bettors were saying it's going to be a quarter point, and the Fed board said, nope, 50 basis point, 0.5%, we're cutting interest rates. Everybody cheered. Everybody's excited. Mortgage rates are going to go down right away. And so the industry knew things were coming. Mortgage rates did not go down tremendously.
And they say it was built in.
It was built in. But the good thing is...
Baked in, they say, baked in.
So the good thing is with this September 18th announcement, with 50 basis point lower interest rate, inflation is apparently leveled off. Jobs, that's the outlier in this, is the job market. Layoffs are lower. but job postings and openings.
The People Not Titles podcast is proud to be sponsored by Land Trust Title Services, your partners for results.
Openings are not as high as they should be. Unemployment has been hovering around 4 to 4.3, 4.4%, which is still good. But the Fed has taken action, and I think they're taking, in what I've read, a victory lap, saying we have what we always wanted, this soft landing where we did not kill the U.S. economy, meaning it did not crash and burn like we've seen in other crash and burns, recessions. It was a softer landing. And so the good thing for us in the marketplace is lower interest rates are here now. They are anticipating.
And where's the 30-year fix today, Matt?
We'll get there.
Okay,
Hold on, we're going to get there.
Slow down.
Slow down. So the Fed will meet 2 more times this year. There is an anticipation out there that they're going to tick it down those 2 times, plus a few times next year. I read that the golden interest rate that they will be looking at for our mortgage rates will be like 5.25, 5.5 next year, which would be a good sweet spot. So we'll get to that. A couple things that I wanted to point out, and this is just, I guess, common sense. When interest rate, so this was the first time the Fed cut interest rates since 2020.
Okay.
So it's been almost 4 years. Actually, it has been 4 years since there has been an interest rate cut.
So this is momentous.
So it's been, since I think it was March 2020 was the last cut, and since that time it's ticked up, and now we're coming down. So some things to expect in the industry, and this is for realtors, attorneys, anybody out there. Lower mortgage rates. We anticipate those ticking down incrementally as we move forward. There's going to be more refinancing opportunities,
yep,
which
we have refis.
Seen. We've seen it. It's not like this huge boom of refis.
But there are people that closed their deals at 8%, and now they're refining. And it's the exact same thing, Matt, that realtors told them is, listen, when rates, everyone's like, oh, I'll wait till rates come down. Listen, refinance. There'll be a little expense to it, but refinance when rates come down. If you want to move, get the home you want to live in, and then when the rates come down, you can refi. So if you can afford it.
So for someone who's stuck in a 7.75 mortgage, rates come down to 5.5%.
Boom.
I mean, that's a lot of savings over the term of your mortgage.
Yep.
So refinancing, market activity, when the Fed lowers it, it gives consumers more confidence. Like, hey, this is a good thing. So spending may go up and people may do this. Plus another factor when rates go down is investment will go up and real estate development will go up because costs will go down for real estate developers and investors. If I need to put out of pocket and get a mortgage for this investment property, it's putting money in my pocket over the long term. So those are good things happening. Now we can move on to mortgage rates. Steve's so excited today.
Oh my
We got a lot of caffeine. We're all hopped up. It's a beautiful day out here.
Gorgeous.
Yes.
So where are mortgage rates, Matt?
Mortgage rates, so even though interest rates have been cut, they're still hovering for a 30-year fixed around 6%. I did a little preliminary scan, and depending, 5.75 to maybe 6.25 would be the sweet spot.
Depending on your credit score, cash down, blah, blah, blah.
All those things. But 6% sounds much better than 7.5% to 8%. So those are good things. 15-year fix is around 5.5%, once again, in that sweet spot. So those are all good things. And, people who are on the fence may say this is the time to do it.
Yeah, so to expect it to get to record once-in-a-century lows again may not happen, but this is a great time, interest rate-wise. Matt, let's get into U.S. existing home sales. What's happening on that front?
So it's been slow. So this is, the last data that we get is for the month of August.
Yep.
So in the month of August, nationwide existing home sales are down 2.5%.
And that was from 2023, which was, people would say, a slow year compared to the few years before.
Correct. And I've said this before, and this, typically existing home sales in a healthy market are 5 to 6 million plus homes transacted. This year, the seasonally adjusted rate as of August is now 3.86 million, which is on track for the worst year of existing home sales since 1995. So a 30-year window with low home sales. And there was another article that we didn't talk about, but I saw it, and this was out of Redfin, was that one out of, I think it's the rate of transactions is so low compared to over the last 30 years.
Wow.
And so once again, because, and we talked about this before, and I want to reiterate it, the lock-in effect, which is 80% of mortgage holders have a rate of 5% or less. And that's because of the refinance boom, or all those people that bought during the COVID years. They got such a low rate. They don't want to give up that low rate because rates have been so high.
I get it.
But with the rates slowly coming down, this will open up opportunities for people to reevaluate. Hey, we could do this. There will be increased inventory happening because people are going to, I see it, all real estate is local. And I don't know in your suburb how it is. Where I live in the city, I see the for sale signs.
Yep.
And it's not like they're moving super quick, but they're coming on.
Yep, they're coming on.
And it's good to see, and especially because we are now entering the slower time of our market, where the spring home selling season, April, May, June, July, August, that's the peak time. Fall becomes a little lower, and then the winter, there's deals, but it's so much slower. So that's going to happen. So that's what's happening nationwide. Sales are down by 4%. The existing home sales price is still over nationwide, over 400,000. This is the 14th month of year-over-year price increases. Inventory of existing homes, unsold existing homes, improved by almost 1%. In August, pending home sales rose just over 0.5%. So those are all good things.
Yeah.
So we'll see.
It's creeping up.
Here in Chicago.
Let's talk Chicago.
So Chicago, once again, down. Closed sales year over year is down almost 7%. Once again, last year was a slow year. This year is continuing that slow year price. The median price is up year over year to just over $350,000, and this is for the Chicago metro area. Inventory of homes for sale is up, which is a good thing, almost 7%.
Yeah, and Matt, this is just important because we crossed the threshold because it was negative for a long time, and so now it has creeped up, which means that the inventory has really accelerated beyond 7%. Like if you looked at a snapshot of August versus August of last year, it's much higher. So I think that is a really good sign, and I think that's why you're seeing these prices flatten out, is because you're seeing just more sellers are willing to let go of that lock-in effect that we talked about.
Yeah, the lock-in effect, I think, is so big, and people underestimate that effect. I mean, I'm part of the lock-in effect. It's not that we are looking to move anywhere in the short term.
But it's not even a question in your mind.
But it's like literally what my mortgage rate is, which has been refinanced since I've owned this house 20 years. I think it's 4 or 5 times I've refinanced.
Sure.
And now the rate I have, it's like, it's not free money, but it's like when I look at the end of the year, the interest that I paid on my loan, it is absolutely nothing versus what it was when I bought my home.
Beautiful.
So always look at that, look at the numbers, look at the long-term appreciation of the home. And it's tough because if you're on the fence about buying, when is a good time to buy? The time to buy is when it's right for you.
Absolutely. Days on market, Matt, are about the same, 21, 20 days.
Yep.
So a little bit less.
Yep. So it's status quo this whole year. I feel it's been sort of a repeat of sales are down, inventory semi-flat, appreciation, the median price continues to go up. At some point, things will level off. In the Midwest is sort of the slow, when you look at the nation
Coasts.
on the whole, the coasts,
Yep.
New York, East Coast, California, Washington, Florida, Texas. Those are all unique markets. And then you got the nice Midwest.
Steady Midwest.
You got to love the Midwest.
You got to love it.
You got to love the Midwest. We're slow and steady. We're going to win the race.
Yep.
Our home price appreciation is up, but it's not crazy. But that means when it goes down, it's, that's the beauty of the Midwest. Your home price appreciation is pretty steady.
Absolutely.
It's not going to swing by 30% one way or another.
Yep.
Unless there's catastrophe.
Yep.
So yeah.
Let's talk Wisconsin, Matt.
Yeah, we'll briefly talk about Wisconsin. Wisconsin has been the bright spot of the Midwest. Home sales is slightly down year over year, almost 5%. But listings are up just over 1%. So that's a good thing. And the median home sales price year over year is up 8% for the state. It's almost $325,000. So Wisconsin is continue, if you look.
It's a great real estate market up there.
It's a great market for people on numerous fronts.
Yep.
And, Chicago's an area where a lot of people own second homes. A lot of people are moving there once they retire or have the means. But Wisconsin is a great place. Good real estate market, great nature, fishing, hunting.
Yep.
Good stuff.
Football, do we have to admit that they have good football up there? Titletown?
No comment.
Okay, no comment.
No comment. Yes, I don't want to get into football.
No,
but yes,
no.
they've dominated.
Yep.
In Steve and I, our youth, it was the flip.
Yep.
The Bears dominated Green Bay, and now for many, many years.
It's been a different story.
So, yeah.
All right, Wisconsin. Let's get into, so we have Chicago news, Matt, that, are we going to move on to Michael Jordan?
No.
Okay.
There's another one in between here.
Oh, let's go. Sorry about that.
No, that's okay.
Here we go. The best time to buy.
This is a great article, and this is put out by Realtor.com.
Okay.
And I've seen it before, and I forgot about it, and then I saw something posted about it. If you're buying a house, today is the best time to buy a house. Actually, between September 29th and October 5th is the best time of the year to buy your next property, according to Realtor.com.
More homes for sale, less competition.
Yep.
And
here,
prices.
So, more listings, less competition from other buyers, more manageable market pace, which means
it's not a frenzy.
It's not
not like piranha.
Right. Lower post-peak home sales, which means we're done with the spring. You go to an open house, you can actually walk around. It's not a buyer frenzy where there's going to be 20 bids on one property.
You're writing contracts on the hood of your car.
There's been more price reductions, which is a fact. People list a house, it doesn't sell, they lower it. It still doesn't sell, they lower it. People who, there's some people who listed in the spring who thought they were going to get, there's actually one house in particular in my neighborhood. They have not moved, and it's still sitting in the market. But those that have incrementally come down, they will move. And more listings are coming on board. So this is a fun little data point, and Realtor.com does a great job. I actually know their chief economist, Danielle Hale. She's great. And this is a fun article, but the reality is if you are looking, this is a great time to buy.
I love it.
And another thing that I want to say is because there's less competition right now, there's less seller concessions. That so many times because there's such high competition for a particular property,
the seller has to give away the farm.
Or the buyer concedes and says, I'm going to buy it. I'm going to pay cash.
Yeah. The buyer not the seller.
The buyer has to concede.
Yeah, the buyer has to.
Where they're like, no contingencies.
Yeah.
And we're not even going to get this. That's another thing,
yeah.
which is hopefully coming to swing back around how it should be, which is home inspections are a huge part of buying a property.
Yeah.
And
as opposed to as is, even though my house is falling apart, you can't find a place to live, so take it or leave it.
Correct.
Now it's going to be like, hey, something's wrong. I want it fixed before I move in.
Correct. So that's coming to swing around too, where if you're buying a home now, you actually could have some leeway in saying, we want this home inspected, or I've also read we won't do a complete home inspection, but we're going to look at the major things, the HVAC system, the roof, the foundation. So that if we're buying this, it's not... Because what happens is after the home inspection, and Steve, you know this better than anybody, someone's going to say, my home inspection shows these things need to be fixed. I am not going to buy your house until you fix them. And a seller, if they have multiple offers, are going to say, thank you very much. It's been nice talking to you. I'm going on to bid number 2, 3, 4 until I find the buyer that says, I don't care the condition of your house. I will take this and do it myself. So very important stuff. But I thought that was super
great.
fun. That
Yeah.
September 29th through the 5th of October.
Sweet spot. Best time ever.
Best time to buy a house.
Love it. Love it, Matt.
Yes.
Okay, let's go on to my MJ's estate. This has been for sale, it seems like since, how long has it been, Matt?
I think it says 12 years, but I feel it's been longer.
Yeah, I feel like
he's
it's been
owned
longer.
it 20 years.
Yeah.
And I put this in here because Steve is a huge Michael Jordan fan.
Absolutely. I met Michael Jordan. I'm into Sports Illustrated with Michael Jordan. So that's a whole nother, that'll be a whole nother, we'll talk about that story next podcast. Yeah.
I was in Michael Jordan's restaurant. Does that count?
No, not at all.
He was not.
Yeah.
So Michael Jordan, fan favorite, beloved NBA figure.
Yes.
We love him.
Yeah.
Great guy.
I'm in The Last Dance as well, man.
I can't wait to see this.
Yeah.
So Michael Jordan built this estate
Yep.
in 1995, and if you look at it, it's crazy.
Yep.
Huge. And then
Number 23 on the gates.
Number 23.
He had legendary workouts there with his Breakfast Club or whatever it was.
Correct.
Right.
So this palatial estate has been on the market for 12 years, and it finally went under contract last month to an undisclosed buyer.
Okay.
We don't know
We'll find
who
out.
She, or
him.
trust is.
Yeah.
But it sold for just under $15 million. He was trying to get $30 million at one time. They lowered it. So anyway, 15 full bathrooms, 4 half bathrooms, regulation basketball gym that you probably played on, Steve. Circular infinity room, and my favorite, a cigar room.
Wow. Love it.
So
$137,000 property tax.
So yes, the new owners will inherit not only a wonderful palatial estate, but over $137,000 property tax payment each year. Can you imagine paying that much in real estate taxes?
Amazing.
So anyway, that was something fun.
Yeah.
That
it's good to know that MJ got out from underneath that. Man.
Yep. Before we move on,
Yeah.
Steve, anything else we want to cover in this fast-paced, informative?
Yeah. So we just at the time of recording, the Bears are they 2-2?
2-2.
They're 2-2. Okay. So hey, and they have who? They have Carolina coming in this weekend.
They have Carolina.
Yeah. And so we'll see. And anything else on the college front? The White Sox have broken a record.
Yeah.
They have the most losses in the history of the Major League Baseball. So congratulations to all you White Sox fans out there. The Cubs are not in the playoffs, and we're in the middle of baseball playoffs. So
yes,
that's
they
kind
are.
of the
They
sports
have
update.
I think they were 83 and whatever, so just above 500, which is exactly where you don't want to be.
Yeah, and that's how many wins they had last year too.
Yeah, so in the middle of the pack.
Yeah.
I mean, that's fine, but
yeah,
it's football season.
Yeah.
Fall is here in the Midwest, which is beautiful. There's a crispness in the air.
Yes.
It's good. But yeah, we can move on. What I want to say is today is October 3rd, and Land Trust will be attending the Oktoberfest as part of one of our largest local realtor associations.
Main Street Association.
Main Street Organization of Realtors in Downers Grove. It's a wonderful event. And so we can't wait to see.
Lots of beer and brats there, Matt, is that?
I have not been there, but I will come back with a full report. You know, I have my Lederhosen ready to put on later. I got my
that's great.
German songs. I got my Stein.
You have your accordion?
Got the accordion all set.
But squeeze box.
So we actually have a tabletop display. Our team will be there, and I'm going to be there, so I really look forward to mixing and mingling and talking to the realtor population here in Chicago.
So we'll have an update from Oktoberfest.
Oktoberfest, so that's great.
Next recording.
Yeah. Do you want to talk about one of your podcasts?
So we featured Tony Zielinski, the Land Trust VP of Sales. I think he's got a great story. I think it's worth a listen. And then we also have Wayne Paprocki coming up. We have Alan Stern, marketing guru. So that podcast is always great information for you if you want to be in the mix as an entrepreneur, a salesperson, or just be inspired. I think it's a place to be, Matt.
It's the place to see and hear what's happening industry-wide, and I always say what a great job Steve does. He's a great interviewer. He really peels the onion back to get the story, which I love best, the career journeys of the individuals you speak with.
Yep.
Because when you hear someone's story, you think like, oh, it was easy to do this from go to point A to point B to point C. But when you hear these firsthand accounts of people, There's a lot of meandering
Yeah.
along the way, and I had my highs and lows. And you see me here now, but 20 years ago, 10 years ago, I was not in the same place.
Yeah,
So
it gives
it's-
people a lot of hope, I think.
So it's great stuff.
Great.
I'm going to plug, and I've talked about this, but we're more finished with our November 7th, our next continuing legal education event, going to be right here in Schaumburg. We'll feature 2 dynamic speakers, someone new we've never had before, Elizabeth Bird,
Awesome.
who is a nationally known title education expert.
Yep.
She's going to be talking about alternative title products and the impact of alternative title products, attorney opinion letters, and other stuff, and how it impacts attorneys today. She's going to talk about some industry stuff. And then we're going to have one of our favorites who has taught and been a part of our last 2 years of CLEs, Scott Lascari, who is another great presenter. He's going to cover what we sort of had to go quickly because our last CLE was so engaging with so many interaction and questions. He's going to cover the impact of bankruptcy on title insurance.
I love
so
it.
It's going to be a great session. We already have a great number of registrations, but for attorneys out there watching who want CLE credit, we are the leader in attorney education, so please come check it out and
Space is
register.
limited, so you want to register quickly.
There is.
Yeah.
Do we want to talk about the Zoom session?
Yeah,
that
let's
we're
talk
talking
about the Zoom session. We have a wonderful group. Scott. Well, you know what? I don't. Scott Longstreet.
You know what?
Anyway.
Yeah, Scott Longstreet.
Yeah.
And Stephanie, somebody.
Yeah, Stephanie. So Scott and Stephanie are going to come and talk about tax appeals they do 5,000 tax appeals a year. A lot of you are seeing in your assessments going, oh my gosh, what do I do? You will find out what to do on that.
So this is for the realtor audience, but anybody who wants to learn about tax appeals, this will be a Zoom
You can register.
session that we're going to set up probably next week,
Yep.
and we'll have registration information, but Steve will be the moderator of this. But yes, tax appeals.
Yep.
It's so important.
It's a very
So important.
appealing subject.
And we have it scheduled, I think it's 10 to 11 a.m.
on November
12th.
And then let's talk about the new land trust closing office, Matt.
This is exciting.
Yes.
So we now have 15 local Chicago area locations, as I like to say, from Gurnee now to Shanahan.
Unbelievable.
And everywhere in between. But the newest office is in Gurnee, the heart of Lake County. This is, I believe, our first footprint there.
Yeah.
And so for you attorneys and realtors looking to close your next deal with a best-in-class title company, we are now 100% set up in Gurnee, Lake County. And along with that, we have 3 new additions to our world-class title team.
That's right.
2 account executives, Rosa Castaneda and Barb Leighton. And what I understand, Sandra Rowland, who is our title coordinator, closing.
Amazing staff person.
So this 3-person team is now heading up our Gurnee office.
Yep.
Barb has 40 years plus in the industry. Rosa has 20 to 25 years in the industry. Sandra, the same thing.
Very seasoned people.
Seasoned,
with a lot of life in them to go.
Seasoned, experienced, but client-centric.
Yes.
And I know many of you watching have worked with them. They're outstanding, so we're so excited to have them on board.
Amazing, and what a great catch they are, and so we are pumped. So.
Yes. So those are the things happening.
Yep.
October 3rd, 2024.
Great. So everyone, have a great October. We will be reporting back in early November on all kinds of different things right around election time. So there's a big build-up, a lot of stuff happening.
There's going to be lots of fun stuff, but this is always a pleasure, Steve. Thank you.
Thank you, man.
And I'm grateful for Steve to have this podcast, and I'm grateful for all of you who are participating, watching, and engaging with us.
Yep.
So thank you.
People Not Titles, signing off. Blessings. Hey, thanks for listening to the People Not Titles podcast. We are proudly sponsored by Land Trust Title Services. If you enjoyed the podcast, please hit the like button, please subscribe, and we'd love it if you'd share our podcast with your friends. Thanks a lot.